Hello, everyone, and welcome to the Wealth Wednesday show. As usual, we usually host this show and invite a guest to come and share with us on matters regarding money and business management. And tonight, we are so excited and honored to have Joel with us all the way from New York City. He is a chartered financial analyst, holds an MBA in finance, and most of all, he has a degree in mathematics and statistics. So tonight you're going to discuss on credit and debt management, and he will be sharing with us his massive wisdom when it comes to matters of debt management. And just to mention, he is debt free. So this means all the principles he's going to share with us, it is something he has put into action that has led him to be a debt free person, especially in an economy like that one of New York, whereby a lot of people are struggling and suffering under massive debt. So, welcome once again. Thank you so much for joining in. If you haven't joined us, or if you feel you have a friend who needs to be with us, please tag them, share the link, give us a thumbs up, and most of all, ensure you press the subscribe button. Without taking much of our time, allow me to take this opportunity to welcome Mr. Joel to introduce himself and share with us a little bit about himself.
Thank you.
Joel,
I truly
welcome.
appreciate you, reaching out and having me do this. I'm honored to be here. So again, for everybody, my name is Joel. I'm from New York. As we mentioned earlier, I do have a bachelor's degree in applied mathematics and statistics from Stony Brook University. I have an MBA in finance from St. John's University. And I also have the CFA designation, which means Chartered Financial Analyst designation. And like I was talking to you about before, all that doesn't matter because they don't teach you personal finance anywhere in the schools. And what you start to realize is a lot of the personal finance and things that you have to learn about is you have to do it on your own, and you have to do it from application. You have to do it from videos like this and articles and those type of things. So I always loved personal finance since I've been young. So for some reason, something about money has always triggered me to ask questions, not necessarily in the acquisition way, but more in a way of understanding people's behavior towards money. Why do people act the way they do? Why are they so emotional about something you've never been taught about? So I'm happy to be here. I appreciate you having me out.
Thank you so much, Joel. Just to highlight, of course, he's going to mention it towards the end of the show. He is very active on Instagram. I personally have watched his videos on Instagram, and they are so amazing. You'll get to learn more from him. And I believe by the end of this show, he will share with us his social media accounts and where you can find him so that you can get to follow him and get to learn more about him. So, right on, we are going to dive into the questions of the day. And to our audience, I encourage you, if you have any question regarding debt, if you have any question on how you can boost your credit score, this is the time you need to be posting it in the comment section. And also, you can let us know where you're watching this live stream from so that we can get to connect even better. So, Mr. Joel, the first question is, what is the difference between a credit score and a debt? Because I have seen a lot of people from my line of consultancy, they really do not understand the difference, and this leads to them making more mistakes, especially when it comes to debt, that leads them to having severe consequences on their credit score. So maybe you could help us understand what is the difference between these two.
Sure. So the one thing to consider, right, is your debt is basically your ability to buy something that you would normally not be able to afford. Now, nobody likes when you say that, right? But that's what debt is. It's borrowing money to purchase something you have no business purchasing in the first place. Your credit score, though, is a numerical number that gives the lender an idea about how well you are paying them back. right? So there's three credit bureaus, at least in the United States, that are able to provide a credit score, right? It's TransUnion, Experian, and Equifax, right? The one thing to consider about all three of them is that all three of them calculate the number differently, right? So your credit score can go anywhere from 0 to 850. I have yet to meet somebody who has an 850 credit score. I don't even know like where that even comes from.
Yeah.
Right, and there, it's number one, your credit score. You cannot mathematically, at least from my ability, you can't mathematically calculate your credit score, right? Because they have their own algorithms as to way they calculate it for you. So that's number one.
Yeah.
You're held to a score that you're not able to calculate. Number two, each individual bureau doesn't have to take the other bureau's numbers. So when you go buy a car, for example, right, and we'll talk about the types of debt later, but let's say you go buy a car and you want to finance it. When you finance a car, the lender doesn't have to use Equifax or TransUnion or Experian. They can use a combination of them. They can use one. They can use an average. They can use two out of the three. It doesn't make any difference at all. So even if you're working hard on the score and you're trying to do the best you can, what you start to realize is they're more likely going to be using a score that penalizes you more. And then the other thing to consider is there's different types of credit scores, right? So the number that you see on TV a lot is that what it calls FICO 8 score, right? So that's the 8th version of the FICO score. Well, there's like 12 versions. Right, so the FICO score that you use to buy a house is different than the FICO score you use to buy a car, which is different than the FICO score for your apartment. FICO score different for your, for everything. So debt itself, when you think about debt, is the ability to borrow money. But when you think about a credit score, it's the numerical measure for a lender to see how good you are. The higher the number, closer to 700, 800, the better you are to get, lower interest rates to borrow money.
Wow, that is so amazing. What I understand from what you just said, it's like a credit score, it's like your report card to give you access to acquiring debt, or just to show that you really are good at managing your finances and all that. So and I've seen quite a lot of people, you find that someone, they've really worked so hard, but they are messing up, which later affects their credit score. So they are not able to access certain things, like they cannot buy a house, they cannot buy a car because their credit score is too low. Maybe towards the end of the session, we'll touch base on what are the factors that really affect one's credit score and what actions should one be taking in order to ensure their credit score is at a level that can allow them to comfortably access credit facility and other products. So I think that is our next question will be, how does being in debt affect one's credit score?
Sure. So it can actually either have a positive impact or a negative impact, just depending on how you utilize it, right? So the short rule of thumb is the more debt that you have, the less your credit score, right? So there's utilization rates. So the utilization rates, I think you posted earlier even, that when it comes to your credit cards, you never want to have more than 30% used on your credit. So from a basic math perspective, if your credit limit is $1,000, you should never have more than $300 as a rolling balance on your credit card. I would even say keep it 25%, do 250 to just give yourself that buffer. But here's the thing. For some reason, people think that they're supposed to carry credit card debt. Like people don't realize you could just pay it off. Like you don't have to carry the debt to incur interest for some reason. And when you think about debt in general, the score is your ability to prove that you can borrow money, right? So when you pay off your debt, you know that you actually take a hit on your score. This happened to me before. So I paid off the car and all this kind of stuff, and your credit score dropped. And you're wondering why your credit score drops. It's because they see you as someone who no longer has a certain amount of debt based on their algorithm to push out a number. like people don't want, like people realize that, or people have this predisposition that
Mm-hmm.
if they pay off their debt, it's a bad thing.
Yeah, yeah. That's true.
It doesn't make any sense. So
Mm-hmm.
when it comes to your debt, you know, in terms of your credit score, the more that you have is
Mm-hmm.
going to negatively affect your credit score. The less that you have is going, you got to find a happy balance. That's what most people believe. However, I think you also got to understand when are you going to use your credit score, right? So you mentioned earlier, right? The house is probably
Yeah.
the only one that
Mm.
I think makes sense when you really
Yeah.
think about it from a debt perspective, especially in New York, right?
Mm.
To buy a house out here,
Mm-hmm.
$400,000, $500,000. Who has that cash just lying around? So
Yeah, I know.
right, so
Yeah.
it's a lot of cash to do that. But to buy a car, you don't have to buy the brand new one. You could save up money,
Yeah.
right? You know, and I think school is also a big one. School, you know, is also a heavy debt that folks have. But yeah, more debt you have, the less your credit score is going to drop. You got to have the happy medium. But what credit bureaus want to see is your ability to take on debt and then pay off the debt. That's what they want to see. Like you're a reliable person, that you're not
Mm.
just someone who's taking out debt and not being able to pay it back.
That is so true. I've also seen some people, since they have this fear, they no longer take debt at all, which is a good thing. But again, you need to strike a balance because, as you say, a credit score, it kind of shows your reliability to handle money.
Yep.
So I've seen a lot of people who say, I cannot take a debt at all. Maybe you could just give us a highlight. What is your opinion on the same? Should someone not take a debt at all? And how will that affect your credit score?
It's a weird concept, right? So
Mm-hmm.
for me personally, I've been in both shoes, right? You've been in the shoes where you had student loans, car loans, credit cards, right? And
Mm-hmm.
I've always only kept one credit card, right? So I never had
Yeah.
multiple. I never
Mm.
had an outrageous car payment. I never had an outrageous student loan, right? But you still had loans.
Mm.
Um,
Yeah.
in my opinion, you can still maintain a credit score without
Mm-hmm.
taking on debt. So what does that mean? That basically means, and we'll talk about it towards the end, but
Mm-hmm.
again, when you swipe your credit card, who said you had to keep the balance? Like you can pay it off the next day and it shows activity. It shows that you're borrowing money and then paying it right back without incurring interest. So me personally, I prefer to live a debt-free life because it causes a little bit less headache. The only thing I have to get at this point is a house, right? But once I get a house, if I'm able to hold on for dear life and you know, knock on wood, I'm able to with a little bit of luck, able to buy a house
Yeah.
outright, then I
Mm-hmm.
don't need to go into debt ever again. Like I don't need to go through that. But if you're gonna take on debt, which I'm against, but if you're gonna take it on, make sure you
Mm-hmm.
have a plan to get out. Right? If you don't go into debt just to build your credit score. That just doesn't
Mm.
make sense. You can get a credit card and do exactly the same thing and pay it off
Yeah.
every month and build your credit score. You don't have to take on mountains of debt so you can prove to people you can borrow money. It just doesn't make any sense.
That is so true. We'll touch base on that because I've seen a lot of people, just because we say you need your credit score is more of how you are acting out with money. They go all out to take debt. They take car loan, they take
Yeah.
mortgage, they take credit card. And especially this credit card, I think we'll spend more time there because this is something that has messed a lot of people, especially in our generation,
Mm-hmm.
because a lot of people think if they have a credit card, that is free money. So they go swiping and swiping and swiping. Then at the end of the month, they find out that they're not able to pay even the minimum balance. Then they end up having a lot of interest. So we shall touch base on that. Maybe you could share with us, actually, that is one of our next question. Share briefly on the various types of debts that we have, so you can touch base on credit cards, student loan, mortgage, bank loan, and any other debt that you feel we need to, discuss about.
Yeah, I mean, think about it, right? In today's
Mm-hmm.
society, for you to take on debt, they make it very easy for you. They call it different names, right? So
Yeah.
you finance a car, you have student
Mm-hmm.
loan debt, you have
Mm-hmm.
credit
Yeah.
card payments, you have a
Mm-hmm.
mortgage, you have medical bills, right? You have payday loans, you have all these things. They don't call it
Mm-hmm.
debt. Have you noticed? Like none of those names they call it debt, and they make it extremely easy for you to get into debt, right? So you just mentioned credit cards, right? So
Yeah.
when I was at
Yeah.
school, this is they can't do this now in the United States, but what they used to do is freshman year when you walked in on campus, you would have to
Mm-hmm.
walk by two strips of all these companies giving you free stuff. They gave you free water bottles, keychains, pens. These are all these banks that are looking to sign you up for a credit card. And you didn't need that much information. All you needed was a permit or a license or identification. You wrote down your social security number, you wrote down your address, and boom, they mail you a credit card 2 days later, and they don't tell you nothing about it. They don't tell you that the interest rate is 21%. They don't tell you that if you're going to be carrying a balance, like you said. All these things that go on a card make it really hard for you to get out of. When you finance a car, what do? They give you the key to the car so you can drive it. It's an emotional attachment, right? The next time,
Yeah.
for everybody who's watching this, the next time you go and look at the car that you want, watch how they manipulate how you think. They put you in the front seat of the car. They give you the keys to the car. They let you test drive the car. Why would you let someone test drive the car that can possibly crash it, right? But but they do,
Yeah.
right? And when you go to a dealership and you want to purchase a car and you tell them what your price range is, why do they show you a car that's more than that number? Because you're emotionally
Mm-hmm.
attached, right? When you think about student loans, for example, in the United States, especially when you think about student loans, you're taught that you have to go to some of these big schools. You're taught that you have to pay all this money. So you end up, think about this. You haven't worked for 4 years. You've probably never worked in your life. You go to school, everything's paid for. You have no idea about money, and then you come out and you owe $100,000 before you start your life. You're already 100 grand behind the hole, and then you've never been
Mm-hmm.
taught about money. You've never been taught how to spend money. So you come out of
Mm-hmm.
school with debt. You get a job. You buy a car. You start buying things on credit, and then you wonder why you have 200 grand you can't get out of debt, right?
Yeah.
Medical bills, they come up a lot, right? When you go to the doctor
Mm-hmm.
for a reason and
Mm-hmm.
somehow you forget to pay, and boom, now you have a debt that's from 7 years ago that affects your credit score. And my favorite is the mortgage, right? The mortgage is one where we all just accept that this is how it's supposed to go, right? And
Yeah. Mm-hmm.
especially in the United States, they give you different ranges of how you can purchase the home, right? They give you balloon mortgages, they give you adjustable rate mortgages. You can put down
Mm-hmm.
3%, all this kind of stuff. The fact is, they got you for 30 years. Like they got you, and you can't do anything,
Exactly.
and it's
Yeah.
hard to get out of it. So, I mean, all of those things that I mentioned that we do in a day-to-day life, that's debt.
Mm.
Every one of them.
Actually, there's something you mentioned about they never call them debt or loan. They give them a very nice name. They could tell you vacation allowance. They could tell you they make it up like they apply makeup on the loan so that you can get attracted to it. And as I usually say, your mindset matters a lot when it comes to finances, because when you give that analogy of where you when you're going to buy a car, they they give you a higher price car and allow you to first of all have a feel on how it feels to sit on it, maybe try to ride it, because they are playing with your mindset and emotions to see how you're going to uh, react and of course buy it. And this reminds me, I did an article the other day that they usually say buy this, it's going to make you happy. That's another way of if if you're going to use a credit card, it's another way of telling you, take this loan. It's going to make you frustrated for a number of years, but they are going to use very attractive words. And also something interesting that you mentioned, when you're joining school, a lot of there used to be banks that were there just to welcome you. They can go the extra mile of giving you a water bottle, a t-shirt, so that you can sign up and get the credit card. And the same happens here where I am, especially with banks. What they do, they don't approach you physically, but they keep on calling you. If you have an account with a certain bank, they call you and they ensure they put uh, people who call you, they are people who really talk nicely, and they are mostly ladies. So that if you hear that voice, you just like, okay, okay, okay. So you're saying yes to things that you don't even know, then boom, the credit card is here with you. And since you're still emotional and feeling, wow, my bank called me, wow, they spent 15 minutes on call with me.
Yep.
You start buying stuff, doing everything. You don't check the nitty-gritties on what is the interest percentage they're going to charge me, what are their terms and conditions. So you end up finding a lot of people, they have debt, but if you try to ask them about it, they don't know anything about it. They're just like, I have 100,000 debt, I don't know how I spent it, I don't know how I got into it. And it's because we become so emotional when it comes to money, and more so debt.
Yeah.
And there's something you mentioned that really got my attention, is the student loan debt.
Mm-hmm.
We've seen a lot of people, they get, when they start life, especially the young ones after school, they start life at a negative um, state, because if you took a student loan, there you are, you got a credit card there. So you're getting out of college or campus maybe with a negative balance of a certain amount of debt. Then to worsen it up, maybe you don't get employed immediately. So you are living, on survival basis. So maybe you could touch base on the student segment, on what they really need to do before we can go to the next question on debt repayment. What would you advise a potential student? What would you advise a parent who is about to, enroll their kids to college? What would you advise them when it comes to matters of student loan?
It's so this is something that comes up a lot, right? When you think about it. So when the kid's about to go to school, right? If you remember when you was at that age and you're about to go and get your collegiate studies on, you think you're an adult, right? You swear to yourself you're an adult, right? Well, you're in college, but in the United States, if you turn 21, you're getting drinks, you're having this, you're doing that. You're an adult. Nobody can tell you anything, especially if you dorm, right? Because no one's there. Well, if you're an adult, you need to start reading contracts, because when you sign the paperwork for your student loans, you're signing for that payment. The problem is that
Yeah.
people, they don't realize how much that money is later on, because up to that point, at the age of 17, 18 years old, they haven't paid anything.
Yeah.
The most that they have, the most advanced kid, at least when I was around that age, maybe had a cell phone, maybe.
Yeah.
Maybe
Mm-hmm.
that was about it. So that was the worst of their payments. So
Yeah.
you have to think long term. I think, and this starts to me with the parents, right? You're usually going to pick up your spending habits from your parents, your guardians, your aunts, uncles, the people that are older, the people that you look up to. So it's your job to make sure you break down to them and you pop that balloon. There's a lot of, like, for kids in particular, there's a lot of people around them that don't know what to do. So your kid is just picking up the bad habits of other people as well as you. So you got to be the one to tell them what it's supposed to look like, right? What does
Yeah.
$100,000, like, what does that mean when you come out of school, when you owe that money, right? What does it mean? What does it stop you from doing, right? What is it that actually prevents you from doing? I think the problem is people focus on credit scores and not net worth, right?
Yeah.
That's what
Yeah.
happens, right? We think you come out of school with an education and a net worth that's negative, $100,000, and then you have to start from there to build, right?
Yeah.
But you
Mm-hmm, mm-hmm,
right. So when someone comes to you and they say, well, they have, a credit score of 750 or 780 or even 800, whatever it is, and your net worth is negative 200, so that to me doesn't make a difference to me. So I think for kids in particular, they have to know the concept of net worth. They have to know what debt means, especially among minorities, right? Especially among
mm-hmm.
black people, especially among people of color. We have to make sure they understand that, because for us in particular, when we get hit with debt, it's a lot harder to get out of, just given the basic
Yeah.
economic opportunities that we have. So you have to learn from the guardians. If you're in a position now as a parent and
Mm-hmm.
you're trying to put your kid into school and you want to put them into a good school, then you may have to shoulder some of that payment, because part of, I think, what's going to happen is that as your kid is accumulating debt in school, you're putting them in behind the eight ball the minute they come out. So maybe you can help them along the way. Maybe they go to a cheaper school and get a scholarship and come out. But going in and getting like $150,000 in debt at the age of, remember, they're coming out at the age of 22 with that much. And there's something you mentioned earlier, and we can go to the next question, is there's an emotion about money, right? You mentioned how they put people in the cars and everybody feels good about themselves. It's how many times have you heard someone tell you, I bought it because I needed it. I'm an adult. I worked hard for it. I deserve it. That's the best excuse, is when someone goes into debt and they say, I deserved it, just run for your life. Because at that you can't argue with them anymore, because now it's not a technical problem anymore. Now it's an emotional problem, right? I bought that car. I worked my ass off. I need to get that car, not realizing what it's doing to them. It's an emotion. Money is very, very emotional for people. They don't look at it as a tool. They look at it as like power and emotion, and that's why they make the decisions they make.
That is very correct. Money is very emotional, and a lot of consequences that people have right now, it's because they made emotional decisions when they were undertaking major financial decisions.
Yes.
And it just highlighted on the importance of parents teaching their children about finances before they can go out there. And I would encourage our audience. We have a video that we did on how you can teach children about finances. So check out our playlist and you'll find one of our videos whereby we really discuss deeply on how you can teach children about finances. You don't have to have a degree in finance for you to teach finance. I usually say having a degree in finance and having financial literacy, those are two different things. And I guess Joel, you can agree with me on that. We have a lot of finance graduates, but we have few financially literate people, right?
Yeah, that's 100% right. That's why I mentioned everything I mentioned earlier means absolutely nothing, because people equate personal finance with mathematics. What's the most hated subject on earth? Math, right? That's the most hated subject from everybody. So you include math, you include emotion. That's why people hate looking at. They think budgets and personal finance and financial literacy they think it's something more complicated than what it needs to be, right? We can sum up financial literacy in 2 words, right? And like, just live below your means and save your money. But most people don't realize that it takes a lot of effort to do that. So yeah, just because someone has a degree doesn't mean you're supposed to listen to them. That means absolutely nothing.
That is very right. So we go to our next question. Which debt repayment strategy would you recommend a person to use? And this will cut across any person in any form of loan, be it student loan, be it mortgage, be it credit card. Which debt repayment strategy would you encourage us to apply that made you become debt free in such a short time?
So, well, there's 2 types, right, that I learned about, ironically, after I was done. right? So after I was done paying these things off is when I started realizing there's a whole community about this. Like there's people who really do this. So there's
Mm-hmm.
two types that I've learned. The first is called the debt snowball method, right? That's the one that's been
Mm-hmm.
popularized by Dave Ramsey, right? So what you do is you put all your debt in order of amount, right? So the smallest amounts at the top, the largest amounts at the bottom, and then you start paying
Mm-hmm.
off the small one, right? So you pay off you throw all the money you can at the small one, and then after you throw all the money you can at the small one, you pay the minimum amounts on everything else. When the first
Yeah.
small one's paid off, you move on to the second one using the payment from the first and then the minimum balance from the second, creating this snowball effect that gets bigger as you work yourself way down the rung. The
Mm-hmm.
good part about that is you build motivation, you build encouragement in the beginning, you see progress. The bad part is you actually pay more interest over the long term because you're not lining it up by interest rate. The second,
Yeah.
the avalanche method. The avalanche method is where you line everything up in terms of highest interest rate to lowest interest rate, right?
Mm.
So you do exactly the same thing though. You put all the money you can towards the highest interest rate payment, you pay that off, and then you start moving on to the second highest, to the third highest, creating the snowball of payment,
Mm.
on the avalanche, I should say, on paying off your debt. The good part about it is you pay less interest over time compared to the debt snowball. The bad part is that you may see no progress in the beginning, right? Because let's say your credit cards are 15 grand, that may take a while,
Yeah.
right? Because right,
Mm-hmm.
the interest payment there or the interest that you charge on a credit card could be 21% or something like that. So it may take you a really long time to start paying off those credit cards. For me,
Yeah.
I think it depends on the person. I don't think you have a good or right way. Um,
Mm-hmm.
I think, the avalanche method, you pay less interest over time. But if you're the type of
Yeah.
person who wants encouragement, that wants to see progress, the snowball method works really well because people can see immediate progress right then and there, right? They have a credit card that has like $30 on it, they pay it off. Okay, boom. They have another one, they pay $50 off. Boom. Then they move to something else, some random medical bill that was $200. Boom, they pay that off. And they see the progress happening. So if you're
Mm.
the type of person that can get, and everybody's human. So if you're the type of person that needs to see immediate action, do the debt snowball. If you're the type of person who's like me, who doesn't feel like giving these people more money than you need to, then do the avalanche method. But I think above all of it, the only way for you to do any of those methods or others is you have to have a budget, right? You got to be able to be on a budget. And people usually think budgets are like jail, right? They think it just constricts you, it's miserable. Who wants to be on a budget, right? Live for today. But you have to be on a budget because that's the only way you're going to know how much money you can throw at your debt. That's the only.
Exactly. Go ahead.
No, go ahead.
Yeah, I was saying exactly. I really agree with you on the budget part of it. I usually say a budget is the backbone of your finances. That is why every country has a budget. So who are you not to have a budget? And countries have a lot of money, right? They have a lot of money to blow it up, but they ensure they have a budget. They employ people to create a budget for the nation or the wherever the county. So as an individual, it's very important to have a budget that will help you, especially in your debt repayment strategy. And as Joel just shared with us, the two major strategies that anyone can use. And as you were just sharing, I was just thinking, do you think these two strategies they are in relation to someone's personality? Does a person's personality affect the repayment strategy that you will use?
Yeah, I would totally think that. I think if you're more analytical and
Mm-hmm.
you want to stick to the numbers and you want to do what you got to do, maybe the avalanche method makes more sense. If you're more, outgoing, personable, emotional about things, like if you wear your emotions on your sleeve, which is a beautiful thing, then maybe the snowball method is the best route because you'll see the immediate progress. For a lot of
Yeah.
people, and I get why people do the debt snowball method more, is because they're tired of it. There's a point in your life where you just say, I'm tired of living in this hell. And
Mm-hmm.
you want that immediate, help right now. And you want to see
Yeah.
tired of it. And I think at that moment, the debt
Mm.
snowball is a behavioral thing at that point, right? Money is behavior. It's
Yeah.
pure behavior. It's not even about mathematics
Mm.
most of the time. And so what you said earlier, right? That's why I was
Mm.
smiling when you said it. I have people that I work with that,
Mm-hmm.
not on my job, but like just people that I've helped consult with on a day-to-day basis,
Mm.
where they hate budgets. They absolutely hate budgets. And the first question I always ask them is, well, you work for a firm that needs to know every dollar that you spent of the firm's. And that firm is successful. So why are you not treating yourself like a job, right? Why aren't treating your finances the same way? There is no job that you work for that's successful that doesn't know where all the money goes. But for some reason, when you get home, you just whatever happens, happens, right? Like it's one of those things that I don't think people they don't realize that the companies they work for have budgets. The countries that they I don't care if you can print money as a country, even the United States, you can print money. There's still a budget, right? There's
Mm-hmm.
money
Mm.
allocated even in New York, municipalities, states, countries. It makes no difference. Everybody has a budget, but for some reason, when it comes to you, you think you can do it in your head. It's amazing. It's amazing how people react.
And I think we need to start viewing money as part of self-love. If you really love yourself, you will take your finances seriously the same way you take the finances of your employer if you're employed seriously, right?
Yeah.
If you are, let's say, in the accounts department of a company, you really ensure you've generated the budget for the month even 15 days earlier, right? You've generated the reports, you've checked the statements, you've done everything on time.
Yep.
But why is it that when it comes to you as an individual, you feel like, I think that is doing injustice to yourself and to your future? Because most people, when it comes to themselves, they're like, oh, it's fine, let me live today, tomorrow will sort itself. But
Yep.
we need to start viewing part of self-love. We include our finances in it. Create a budget. You don't have to have a complicated budget. You can start with, simply listing down your expenses and income, then follow people like Joel to get more tips. You can also follow us on Instagram to just learn on how you can create a budget in a very easy and simple way, as well as watch videos on YouTube that can help you become a smart budgeter.
Yeah.
And the last, not the last, we shall touch base. Maybe you could maybe say something about credit cards that you feel maybe you could have left out. Just give us a whole picture on how credit cards work, because this is one of the most it's one of the things that a lot of people, they are in debt. It's like the small, it's the little devil of money to
Yep.
everyone. We've grown in a culture or society where we like free things, but every time we have any money that we think is free, we just misuse it. So maybe you could give us a deeper analysis of credit cards and give us your opinion on how people in New York and Europe view credit cards, and how they one can get along with it.
Sure. So I'll start with a study that was actually done. I believe it was McDonald's, I think, that did the study. I don't know what year it was. What they found out
Mm-hmm.
was that when you use a card, right, versus
Mm-hmm.
your
Mm-hmm.
you'll spend, I think, 28% more using a card than you will a cash, right? What that means is when you go and buy something and you swipe a card, you don't feel the pain. If I gave you
Yeah.
$100 in cash and I said you have to use that for the week, every time you put the dollar down, your amount of money gets smaller. right? So you feel the pain a lot more when you pay cash versus when you pay credit. See, they make it
Mm,
so easy. Think about it now. You could just go and put your watch, to at a counter, and it'll do it for you. Why are they doing all this? It's not just technology. They're doing it because
mm,
they understand that you're more likely to carry a balance, and they're more likely to make money off of you if you use a credit card. So for me, what I usually do is I usually use cash. That's just for me personally, right? Like I use cash more often than not. But
mm,
if I do use my credit card, the
mhm.
first thing you have to understand is a credit card can be a double-edged sword. So you have to make sure you pay it off. Do not carry a balance. So some people say, do you pay it off halfway through the month? I don't care when you pay it off. Just don't get any interest. That's all I care about, right? Right? Don't
Yeah.
give people extra money for no reason. And what you start to see when you look at studies is that more people don't pay off their credit cards, which is why they give them out. More people carry balances, which is why they keep giving you credit cards. You spend more when you use a credit card. Have you ever gone into a store where they don't even accept cash?
Mm-hmm, mm-hmm. I actually saw that today. I went to a local supermarket and I wondered, where are the cashiers? Then they were like, we don't have cashiers anymore. It's a self-service machine and it is only using a debit card or a credit card. Then I was like, okay, so whatever I have only hard cash. That means I need to return the products and look for a shop that
Yeah,
uses hard cash. So it's really a season where we need to be smart with money, as you said. We need to, if you're not a person who can walk around with hard cash, then you need to learn how credit cards operate. So go ahead.
correct. I mean, and you can use your debit card, right? Your debit card
Mm-hmm.
and your credit card have basically the same security features. I get why people don't
Mm-hmm.
want to use your debit card because that's liquid cash gone. A credit card mischarge, they'll work it out. You don't have to worry about it. But your debit card, that's cash that's leaving the account. My advice would be, if you're gonna use a credit card, make sure you swipe your credit card for things you already budgeted for, right? So if you drive to work, right, you have to.
Yeah.
So you estimate I spend $120 a month on gas. Okay, then I spend
Mm.
$120 on my credit card. That's it. You can use the
Yeah.
credit card for that, but don't use a credit card to purchase something that you're not supposed to be purchasing, right? Stay away from that. And then start to realize from a behavioral perspective, they want you to use the credit card because you're more likely to overspend. You're more likely to carry a balance. They're more
Yeah.
likely. Remember, everything's a business, good or bad, right or wrong. They understand
Mm-hmm.
behavior. They understand people. That's why you get these things in the mail all the time, right? Where they are trying to offer
Yeah.
you credit cards,
Mm-hmm.
right? They're not offering. They're
Yes.
not offering you new debit cards. They're always offering you new credit cards, the gold, the platinum, the this, the that, because they want
Mm.
to keep swiping the card because they make money every time you swipe the card. They make money off the merchant, right? So whoever
Mm-hmm. Mm.
the store has to pay them money. You have to pay
Yeah.
them, and they know you're not going to pay it off. So they're gonna that $60 charge. They can make anywhere from 80 to 100 off of you if you start to keep a balance.
Exactly. And actually, I had a client, I think last month, and she was just sharing with me. She had a certain balance on her credit card, and unfortunately, I think it was like, let's say $152. And unfortunately, she wanted to pay it via the ATM machine, so she couldn't put $2 in the machine. So she decided, let me do it next week when I get, maybe to a bank or whatever, just to ensure I do the transaction. And guess what? Within a week, uh, since she only had a balance of $2, she had been charged almost 30 times just because she delayed with $2. So that means anytime you don't clear up your balance on time for a credit card, you are getting charged more than even what you spent while using it. So to our audience, we are about to end the session, and we encourage you, if you have any question regarding debt management, credit card, or how you can boost your credit score, feel free to ask right now, as we have our guest, Mr. Joel. He's a CFA, Chartered Financial Analyst. He will be more than happy to share with you on how you can be able to become debt free in a very easy and simple way without having to break your back, because
Yeah.
we only live once. So yeah, feel free to write your questions if you have any, or if you have any comment that you'd like us to hear or know, then feel free to write, to share with us in the comment section. So Joel, we go to our next question, which happens to be our last. What are the factors that can affect one's ability to repay debt, and how can one overcome such? Because we've seen a lot of people, they tell you, I started repaying debt, but somewhere along the way, I couldn't get through it. So maybe you could highlight to us what are the factors that could affect one's ability to repay, and how we can overcome it.
Sure. It to me personally, it starts here,
Mm-hmm.
right?
Oh
It's
yeah.
the mentality,
Yeah.
it's your discipline, it's your mentality towards money, and
Mm.
there's a fatigue about it, right?
Yeah.
One of the things we talked about earlier was how easy it is for you to get into debt, right?
Mm-hmm.
If you
Mm.
want to right now, right, you can
Mm.
go outside and go purchase a car with basically no money down and have the car
Mm.
for the next 7 years, and it costs you $70,000, right?
Yeah.
You can
Mm.
literally do that in probably 24 hours. You'll be in
Yeah.
70 grand debt, right? But to get
Mm-hmm.
out of that debt will take you years,
Yeah.
years to get out of it because
Mm.
of how much it is compared to how much you have. So the first thing is you have to develop a mentality to play the long game. For some reason, we
Mm.
was talking about earlier. For some reason, people just assume they want these things done overnight. It doesn't work that way. I'm a very big proponent of what you mentioned earlier. You reap what you sow, right?
Mm-hmm.
That
Yeah.
to me, like I don't believe, like I'm not a big fan of debt forgiveness. I've never been a fan of it because if you were an adult and you made a decision, you have to now deal with the ramifications of the decision. They didn't hide the paperwork from you, you just didn't read it, right?
Mm-hmm.
You
Mm-hmm.
have to understand that you've got to stay disciplined. You got to look the animal in the face. You got to look the debt in the face and recognize what you did wrong. So the first thing is you got to maintain your discipline. And the second thing is, I think you got to maintain people around you who are encouraging you, right? So if you have a spouse and you're trying to become debt free, but this guy's over
Mm-hmm.
here spending money left and right, it's not going to work,
Mm.
right?
Yeah.
It's not going to work. Like
Yeah.
you got to have someone do it with you, right? Whereas you got
Mm-hmm.
to be on, I maybe you look for encouragement on Instagram or Facebook or social media.
Mm.
You be part of
Mm-hmm.
the debt free community, whatever it is that it takes for people to
Yeah.
encourage you along the way. I think is
Mm.
important. You got to
Mm.
stay on a budget. You got to do all those types of things. But to me personally, it's here. This is why you stop. You don't stop because you don't have the money. You don't stop
Yeah.
normally because of just an emergency. You can always restart. The reason why
Mm.
you stop is because of this. It's because you're mentally exhausted and it's painful, right?
Yeah.
It's like going to the gym. How easy is it for you to gain weight? Think about it. Look how easy it is for someone to just completely
Mm.
get out of shape. All I got to do is go to McDonald's for a couple of weeks. I'll be good, right?
Yeah.
I'm gonna be all right. But if you ever
Yeah.
notice, how hard is it to lose the weight? It's the
Mm.
same mentality. It's very easy to get into debt. It's hard to get out of debt. So in my opinion, if you're gonna get into debt and you're gonna be in this type, you have to play the long game. This is not something you do overnight. But I guarantee you, in my
Mm.
opinion,
Mm-hmm.
there is a certain peace of mind when you are debt free.
Mm-hmm.
That is freedom. Because
Yeah.
now no one has abilities to ask to tell you to do certain things. Right? You
Mm.
can save money. You can don't like the whole point of me doing the debt free lifestyle is because you're able to now donate to charity more,
Yeah.
right? So you're able to help people who look like you, of your same skin color, or any charity. It's agnostic of religion. You now have the ability to help. You have the ability to invest. You have the ability to save. So that's, never forget the goal of why you're doing it. That's the big thing too.
Wow, that was so profound, Joel. And exactly, it starts with the mind. You win any battle in the mind. So the same way, when you are getting into any financial mess, it starts with your mind. You buy things emotionally. So the same way, if you want to get out of debt, it's important for you to first of all get transformed in the mind and make that decision. And I can totally agree with you. When you are debt free, the peace that comes with it, it's just on another level as compared to when you are here thinking by end of the month I need to have paid this, all that, their interest and all that. So we really encourage our viewers, if you are currently in debt, this is the time you need to join communities, like-minded communities that will help you learn how you can get out of debt. As a matter of fact, I came to the realization that being in debt can be addictive, and I believe Joel, you can agree with me on that. um, Being in debt is super super addictive. I've seen a lot of people, they started with one debt, they finished it, they took another one. And even in financial institutions know that. So when they see you've tried and cleared a certain debt, they will again come to you with another one, now that looks more better and simple and all that. But the thing is, debt is kind of addictive. So it's important for you to be in a community where people share with you their thoughts on debt management. And I really encourage you to follow Joel on Instagram. He really shares quite informative posts on how you can manage debt and get out of it. And also, to those that have spouses, now this is the time you really need to sit together and analyze your finances and get to know each other's personality when it comes to money, so that it doesn't become that you're here trying to get out of debt and your partner is there trying to swipe as many credit cards as possible. So it's like you're going back and forth. You're trying to get out, and the other one is trying to pull you back. So it's important for you to, as a couple, you need to have that hard money conversation. If you don't know how to start a money conversation in a marriage or a relationship, check our playlist. We did a video on how you can start money conversation without sounding too harsh and
Yep.
all that. So to wind us up, maybe Joel, you'd like to share with us your parting shots, and of course share with us your contact details on where people can maybe get to follow you and reach out to you in case they will be needing more guidance on becoming debt free.
Sure, sure. So I think if there's one thing I would leave to everybody, is that a part of all that you earn is yours to keep, right?
Yeah.
If that's yours, you worked hard for it. A part of all that you earn is yours to keep. The only way you're able to keep money is to reduce your expenses and to reduce your debt, right? They're all linked. And to me, the coolest part, like I mentioned before, is when you do reach the point where you can financially do what you want, you can impact people's, not only yourself now, but you can help other people, right? So one of the things going on in our countries a lot now is, it's not only, we depend on everybody else to help other people when we don't depend on ourselves. We can do it on our own if we were smarter with money. So my lasting thought is, become debt free, because not only can you help yourself, you can help people around you, and a part of all that you earn is yours to keep. So this is what started me doing this. I mean, it happened during the pandemic and talking with friends.
Yeah.
And in the United States, there's been a lot of racial tension, especially out here. And one of the things that irked me was they're always waiting for the government to do something. They want the government to pay the reparations. They want the government to do blah, 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 blah. They want the government to finances, right? And to me, it was like, you don't need them to do it if you can control what you can control, which is your money. No one forces you to spend money that you're not supposed to spend.
Yes.
So I created an Instagram page. It's called Debt Free Joel, right? Joel.
Mhm.
Also YouTube, I put the videos out there. Same thing, Debt Free Joel. It's pretty simple. I try to put
Yeah.
content out there. As Sheila knows,
Mhm.
trying to do this takes a lot of work and it's for free.
Yeah.
But I think it's important that we try to put this information out as much as possible, especially among minorities, but for really anyone, especially not only
Mhm.
minorities, but women minorities. Like what you're doing is incredible. Like I think you
Thank
hats
you.
off to you. This is really big for you to be doing this. But yeah,
Mm.
if you guys ever want to reach out, Debt Free Joel on Instagram and YouTube.
Perfect, perfect. Thank you so much, Joel. I will be attaching the link to your YouTube channel in the description box after this live session. And as you said, um, your money is yours to keep, multiply, and give. It's not for debt and all that. As I think it's Dave Ramsey who says, debt is one way that can really reduce your chances of becoming wealthy in
Yeah,
the long run, because you come to realize the money that you pay as interest, if you could have invested within
exactly.
a 10 years span or 15 years span, that money could have multiplied. So as much as possible, we are not saying you shouldn't take debt, but ensure you have a plan. Joel mentioned something at the start, that when you are taking a debt, have a plan. I always say, if you're going to take a $1,000 debt, have income streams that can generate at least $2,500 per month, just to give you the allowance of being able to repay the debt on time.
Yes.
Otherwise, if you don't have a breakthrough or a plan on how you can repay that debt, stay away from it. You don't need it. And again, it's
Agree.
important for us to end this mentality of waiting for the government to do everything for us, government to waive our student loan. They were not there with, they gave you the choice to take the student loan or don't take it. um, you had the choice of either taking that bank loan or not. So it's important for us to rise above that mentality and be responsible for our own finances. And most of all, as our guest mentioned, when you are debt free, you are able to do more to the community around you. You are able to impact other people. It's not just about giving. You even have time to do other things that impact people. And Joel, you can agree with me. If you have debt, you have to work 5 jobs, 7 jobs,
Yeah.
a lot of jobs. You don't have time to shoot a video to tell people how they can become
Got it.
more better financially,
Yep.
right?
Yep.
But when you are debt free, you'll find that you'll have time to do the things you love, ultimately impacting other people. You'll be able to shoot a video, you'll be able to follow your passion. You'll not have to kill yourself with 10 jobs just because you acquired a credit card to buy that designer shoe. It's not worth it unless you can afford it with cash. So
Exactly.
I believe we don't have any feedback as of now, but if any question will arise later on, I would really direct them to your Instagram account. I'll also attach a link to that so that people can get, be in touch with you if, in case they will be having any other question. To our audience, thank you so much for your time. We really appreciate you. Thank you so much for watching with us, and let's keep subscribing to the channel, sharing the link out. Remember, without we can only do our best, but once you share the video, we are able to impact as many people as possible. And to our guest, Mr. Joel, we really want to honor you and thank you so much for accepting our request to be on the show tonight and sharing with us the wisdom you have on matters of debt, and most of all, giving us practical ways we can get out of debt and avoid one if you're not there. Receive our sincere gratitude as Financial Wellness Center Fraternity. We really want to thank you and appreciate you for your time.
Thank you. I had no problem. I appreciate it. I had a great time.
Thank you so much. Until then, to our audience, we'll see you next Wednesday. Ensure you subscribe, share the link to your friends, and most of all, get to watch videos and put everything into action so that you can see results. Until then, stay safe and let's keep living financially healthy. Thank you.
Have a good one.
Bye.